All right, joining us right now with a longer-term outlook for the housing market is Nick Retsinas. He's the Director of Housing Studies at Harvard University. Nick, good afternoon.
Nice to be with you.
Hey, great to have you here with us. Courtney really eloquently breaking down the move that we've seen in those mortgage rates, highest level in about 7 months. What does that mean for the housing market? It's got to slow it down.
It's bad news. I mean, there are some signs that, at least some signs, far and few between, that the housing market is starting to stabilize. It hasn't stabilized yet. Clearly, increasing mortgage rates will undermine and, in some ways, may even thwart that recovery. So they're very, very important. And if they rise significantly in the short term, which is very possible, it's really going to slow down any recovery.
Well, Nick, help us out here because, these incremental moves, folks will come on and say, hey, this is nothing like we saw when rates were double-digit. You had double-digit mortgage rates, several decades ago. So historically, we're still low. I guess the thing is the mix between even small rises in mortgage rates coupled with a very tough economy, weak economy, people losing jobs, and it's really a recipe for disaster.
Well, you're absolutely right in terms of the mortgage rates are sort of critical. It has been the mortgage rates that has simulated refinancing. Refinancing helps add more disposable income to our economy, so that helps with the economy. It's mortgage rates that help first-time home buyers decide to jump into the market. To the extent mortgage rates creep up, as they are doing, then there's just one more reason to stand on the sidelines. And standing on the sidelines is the last thing that this housing market needs.
All right, what can the government do, or what do you think they might do?
Well, they have to thread the needle. When the Fed first got involved in buying mortgage-backed securities, in part they got involved because no one was buying those securities. Everybody was very nervous about buying mortgages. Today, as the economy shows signs of recovery, more investors are in, but now investors are thinking, well, geez, maybe the Fed is overshooting. If they overshoot, I should worry about inflation. If I worry about inflation, I'm going to demand a higher interest rate, and all of that translates potentially into higher mortgage rates.
Hey, if this is a baseball game, and Nick, and forgive me, because I asked this to a lot of guests, when we look at the housing market, what inning are we in your view?
It's not time for a closer. We're not in the ninth inning. We're probably sort of halfway through it. You see signs of the bottom, but we're not at the bottom yet. And we've got to reach the bottom before we start to stabilize and move forward.
Now, does that take into account things like, I've talked to Whitney Tilson of T2 Partners. He's got a book out talking about kind of mortgage meltdown. He talks about the problems in the housing market not being over by any means. And he talks about, not only you've got prime, subprime, you've got Alt-A, option arm, jumbo prime. And then he says you go into the home equity area loans, that all of that still has to play out. Do you agree that we've got all of that to work through?
Well, all that's to play out, but in some ways, the story of the housing market is the story of the broader economy. The central problem facing the housing market now are people's fear of losing their jobs and actually losing their jobs. That's sort of critical. We've got to somehow stabilize this economy. Once we do so, I think that's the foundation for a housing recovery.
And you think that recovery, once we get to that stabilization on the jobs front, that will happen rather quickly?
Well, I think it'll start to happen. I don't think happen quickly means that we're going to see a rapid rise in housing prices. I think in many ways, once we find this bottom, we'll troll along the bottom for a while.
All right, you got to talk to me because you study this about regional variations. Talk to me about some of those really, really weak spots. I'm thinking about Florida, California, Arizona, Nevada. What are you seeing specifically there? Any signs, too, there that we're seeing a bottoming?
Well, we're seeing a lot of investors in some of those markets. So investors are starting to wonder, geez, are we at the bottom? Do I have the holding power if I buy this property now to rent it and carry it through? But given the extent of overbuilding, I think we're farther away in those areas than, say, the Northeast. The Northeast didn't have the overbuilding because it was already built up.
Right.
So to the extent the economy can stabilize, I think we might be a little closer to recovery in the Northeast than we are, say, in the Southwest.
Got to ask you, though, about if the Fed, if it slows, actually, Nick, it's buying of long-term treasuries on which we know long-term mortgage rates are based. I'm just curious, as well as the purchases of mortgage securities, if they slow down on that, what would that do to mortgage rates in your view?
Well, they've got to they have to thread the needle. If they pull out sort of too quickly, people are going to wonder kind of what's going on.
Right.
But if they build up their participation, if they decided to ramp it up, then the people worried about inflation will be even more concerned. and that concern will trend into higher interest rates. It's a tough job and a tough balancing beam they're on.
Yeah, no doubt about it. So, Nick, add it all up for us in terms of what you're seeing going on in the housing market overall, the economy overall, and then what's been going on with mortgage rates. Where do you think mortgage rates are headed from here? We had Courtney talking about we hit a high of 5.59 this week. Are we going above that in your view?
I think we're more likely to trend up than not. I think if the Fed can appropriately calibrate its purchases, it might moderate that trending up. And if it moderates the trending up, it might give some time for this housing recovery to take hold.
Okay, but again, keep a watch on that jobs market, correct, to really start easing all the pain that's out there.
Absolutely.
All right, we're going to leave it there. Nick, thank you so much. Have a great weekend.
Thank you. You too.
Nick Retsinas, everybody, Director of Housing Studies at Harvard University.